Welcome back to the channel. I'm Jacob Fisher, and today it's Dividend Day, or Friday, or Monday. Well, anyways, we're talking about dividends and the top 5 dividends to include in your portfolio. If you haven't seen my video on savings account in the corner, go check it out. But what I've essentially done is move that portfolio into a new one. I've created a 36 dividend stock portfolio right now that all yield a decent amount while all providing decent growth opportunities as well. In this video, we're going to be going over the top 5 names in that portfolio, but overall this portfolio ends up with an average dividend yield of 3.31% for those at home, which is probably most of you and me. In order to get a $60,000 income from this portfolio, you need a $1.8 million portfolio, which, you know, you could be putting $1,000 a month into these stocks for 24 years and they would compound to that size. Then you'd get paid and you wouldn't have to do anything, right? That's not investment advice though, so let's tap that like button, subscribe, and get into the top dividend stocks of that portfolio. What's really neat is that you can use Python to automate your investments in Robinhood like I did, depending on how much you invest per month, and it just splits it out for you, or you can just use M1 Finance to do that. But that first buy that I did was T. This one's pretty obvious, right? We had to include AT&T into a dividend portfolio. This is one of those stocks that is a dividend aristocrat people like to talk about, which is essentially where a company increases their dividend for 25 years. AT&T's dividend is 7%, which is quite a bit. Something I kind of like about AT&T is the fact that they don't kind of sit stagnant and just do cell phone stuff. They've expanded into fiber internet and offering it in some places, I think mostly around the East Coast and Florida. It's pretty innovative, right? Though I do have Verizon for my phone. That is in the portfolio, but it's not on this list. From a technical standpoint, it's not an awful time to buy because they are lower in price than pre-pandemic, but are still offering that nice and high dividend. According to the RSI indicator, an indicator used to show if a stock is oversold or overbought, they're sitting right at 50, which is, again, right in that middle of oversold and overbought. I've used this indicator to find stocks like Pinterest or Etsy that are up 100% or more for me. While T won't increase to that 100% that I want it to, it does show me that it's not overbought right now. Moving into number 2, we have Seagate Technologies, or STX. I've bought lots of stuff for them over the years, so it's only fair that they paid me back. I just think they're a solid company with a solid chance for continued momentum and success in the hardware industry. They've created things like hybrid drives and honestly could take a large portion of the SSD market share if they decide to break more into that territory to compete against a company like Samsung. They have a nice dividend of 3.71%, a good booster to that average rating in my portfolio. Now they're currently overbought, so I won't be adding anything to my portfolio right now, and we'll probably wait until it comes down a little bit. But it's still a great dividend stock. Many tech companies out there just do not offer high dividends, which is why Seagate was added to my list, because I needed to diversify a little bit into technology. We have O, the monthly dividend company, with a dividend yield of 4.51%. If you don't know about this company and you're researching dividends, I don't know how you haven't come across it until right now, because, you know, they're a REIT and have commercial real estate buildings for so many stores out there. Walgreens is one of the largest renters for them, but they also have AMC and Walmart. Just waiting for Wall Street Bets to get a hold of them. They provide that nice monthly dividend, but are also right in the middle ranges for the overbought and oversold range. Many stable dividend stocks do not exceed the overbought range, or most of the time they don't. Occasionally it does happen. Moving into the next one, we have ABBV, which is a pharma company with a 4.89% dividend yield. They have big name products like Humira, I think that's how you pronounce it, and other drugs too. That's essentially the main one that I recognize, because sometimes drug names are really complicated and Colorado likes other kinds of drugs, but they don't have too many dividend stocks for that, now do they? ABBV actually has a little foray into that industry, so that's kind of fun. They are again currently in that middle range for the RSI, making them a decent buy, but not the best, of course. RSI works really well for momentum stocks, by the way, if you wanted to look it up for those. Lastly, we have 3M. It's number 5 though, but don't worry. If you want a full look into my dividend portfolio, I will be getting into that in a later video. MMM offers a dividend of 3.36%, so it's pretty good. They make a ton of products. In fact, you probably have some 3M products around you right now. Command strips, I have them in the drawer over there. Respirators, Post-it notes, and filters that go into your air conditioner, all made by 3M. So they have their hands just about everywhere, or tentacles, whatever that saying is, right? They're just coming out of a slump, but are not in that overbought range yet. It looks like they've actually had a decent year and are still offering a great dividend and potential for growth in the future. Having companies that aren't too high in that AT&T 7% dividend range allows them to use that money instead of paying us, the shareholder. They can invest it back into the company to grow the business and hopefully develop some more innovative ideas to, kind of grow. That 3 to 6% range is decent for companies still looking to expand, but once you get above 10%, you're trading pretty dangerous waters in terms of growth for the company because they are just giving away too much money. Anyways, Robinhood has this neat feature that allows you to invest in fractional shares, but they also allow you to connect an API of sorts to make trades for you. Building a tiny Python program allowed me to send out my orders for each stock to break up my portfolio in fractional shares, all in the click of the button, rather than going into the stock, typing in the dollar amount, and swiping up. I'll be working on some sort of public program that if you want to follow along, you can join with the Discord down below. Let me know your thoughts on these companies in the comments below, and if you'd invest in any of them. I upload videos on Monday and Friday on travel and finance. If that's something interesting to you, hit that little subscribe button down there. Thank you so much for watching, and until next time.